Hello, my name's Kelly Lemon from Property Investor News, and I'm here at Excel Centre, and I'm very fortunate to be talking to Scott today. Scott, tell us a bit about yourself and the company.
Good afternoon.
Good afternoon.
We specialise in providing very, very quick, very convenient finance, primarily on a short-term basis, but we also stretch to buy-to-let up to 30 years. We lend on all types of property, irrespective of nature or condition, and we lend to all types of people, often irrespective of credit impairment.
So you really are, you really get a chance to get a good sense of the market then, how it's doing.
I would like to think so. In my personal role, I attend a number of the auctions throughout the UK. We've got affiliation with just over 100 different auction houses. And I like to think that the auction very much is at the forefront of what's happening in property. And you can identify sometimes trends slightly ahead of the market maybe by looking at what is the coalface of the property market.
And what trends are you seeing at the moment, Scott?
There's certainly people are veering towards commercial property. I'm not saying away from residential, because the residential market is always going to continue to be quite strong. I think the overall split in the auction market currently is around 80-20 in favour of residential property. But with things that we're all aware of, like the changes in taxation, even now the recent changes in the PRA guidelines, there is a natural movement towards commercial property, dare I say, for the more seasoned investor.
And how, as a whole, how is the market coping with some of these changes, do you think? Do you think people are realising the impact they're going to have, or do you think there's still quite a way to go?
The market is very, very resilient. And we built ultimately to adapt. We're going around, not going to a biology lesson, but that's what in our makeup as people. We adapt to situations. When we looked at the introduction of the 3% stamp duty, many people thought the world was about to end. But nowadays, yes, it's something that investors will grumble about, but it's just par for the course now. We adapt to the situation.
And what sort of trends are you seeing? Are you seeing any particular strategies or particular parts of the country?
There's certainly movement towards the north. And I say that with a smile, because with my accent, that's where I'm from, but it's got nothing whatsoever to do with me. We're all familiar with the London market and so on. I think people are veering to the north, the stronger rental yields in particular. Again, with the aforementioned taxation changes, that's had some effect and some impact on London. There's a word I'm only going to use once. It's like saying Macbeth in a theatre, and that's the word Brexit. As we know, that's also had some impact, especially with things like foreign investment. And also we've got the Northern Powerhouse. So we are seeing a bit of a northern movement at the moment. And
you said that investors are quite resilient. Yeah. Tell me, are there any challenges you see on the horizon that you think might impact the market?
There's going to be one big challenge, and we're all looking tentatively on that Thursday at the Bank of England. Interest rates are going to rise. What to and exactly when? I've not got a crystal ball. But that in itself is going to pose a challenge for some individuals. But again, ultimately, the situation is with inflation that has to happen with that rise. But that's going to pose its challenge in itself. As I mentioned, the PRA guidelines, which restrict people that own 4 or more properties in a buy-to-let portfolio, restrict it to a 75% LTV. Again, that is going to be another challenge. The taxation that's been graded in since last year on buy-to-let, that's also having another challenge, on the tax relief, should I say. All these are challenges that are set out to the investor.
And how resilient do you think investors are? Because like you say, those are some big challenges to overcome. Do you think we're going to see people exit the markets?
I think not necessarily people are going to exit the market, but I think people are looking to diversify within the market. There is always going to be people that move on to other things, but let's face it, there's also people moving into property. And again, to focus on programs like Homes Under the Hammer, it's seen people, and to focus on auctions again, which is my baby. People that may not have considered buying an auction historically are now moving towards the auction room, which is positive for the auction room because it's driving prices up. Granted, some investors are saying that's a bad thing, but not when the investor is also selling in the auction room. It's all a positive.
And what advice would you give to investors that are currently already in the market?
I think the only time I'd use the word advise is around read the legal pack when responsible with an auction, because we work very, very much in a non-advised capacity. But ultimately it comes down to due diligence, looking at areas, looking at trends, looking at the properties, the conditions of properties, and of course the legal pack if buying from an auction. They're the things to look at for.
And do you think now's a good time for new investors to enter the market?
A good question, and I come back to that with another question, if I may, and that is, are we ever going to see money as cheap as it is at this moment in time in our life cycle? With the base rate where it currently sits, there's an argument to say we will never see this cheap money again in our life. So with that in mind, and with the RICS stating that property prices are looking to increase at 3.3%, think it's a great time to buy properties.
Scott, you're very convincing. What can I say? Coming back with another question, I mean, you had me at that, didn't you? Scott, thank you very much for your time.
You're very, very
we really
welcome.
appreciate it. That was Scott. This is Property Investor News, and we're here at the Excel. Thank you for watching.